Hi, everybody. Scott Riley, the Market Update Desk with Mortgage One, NMLS number 157524. It's June 21st, 25th, and that means happy heavenly birthday to Senior Analyst Mr. Gibson. Uh, Passed away just a little over a year ago. In sports, we saw a couple of huge trades in the NBA. Giannis Antetokounmpo going to Miami, and now we saw LaMelo Ball going to Minnesota. And Jalen Brown is probably going to be on the trade block too. So we had a lot going on. So we got a lot of data hitting today, and it's helping us both in the stock market and in mortgage-backed securities, treasuries, and mortgage rates. So oil prices are continuing to moderate with WTI crude oil now under 70. Bond yields are continuing to fall lower. 10-year treasuries actually down for today to 4.36. Remember, yesterday, an important line to close was under 441, and we did that, and we're continuing to improve. Now, stocks specifically are having another green day, and they're getting help from blowout earnings from Micron. And I think that stock's up over 9 or 10% right now today. So lots happening in the financials. The all important PCE, Personal Consumption Expenditure Report, came out today, showed that all in headline PCE rose 0.4% during May. That increased year over year inflation from 3.8 to 4.1%. Now, the figures were in line with estimates, both month over month and year over year. The market seemed to shrug the higher report off, and we're getting better on treasuries. In fact, the main reason for that is oil is now down over $30 a barrel from the previous month. So remember, this May data was when oil was at about 115 to 118 a barrel. Now we're just about $70. So we're looking at real numbers, and that's why the treasuries are looking at more real-time data in the day-to-day trading right now. Now, the core reading, which strips out the volatile food and energy price, rose 0.3% last month. So year over year increased a tenth from 3.3 to 3.4. It's a little hotter than some of the estimates had anticipated. And once again, the bond market is shrugging that off. The main reason for that is over a third of the increase, 0.1%, is due to portfolio management expense, which is not really a real inflation number. The reason being is stocks continue to set all-time record highs. So the fee paid to financial advisors have increased on an overall number due to portfolio values, not because their fees percentages have increased. It's because overall portfolios are up to all-time highs. If we look at it without portfolio management in the core, it was very well behaved at 0.22%. In addition, shelter costs continue to overstate inflation. Talked about this forever now. That showed a 0.3% monthly reading and annualized to 3.6. Now that's much higher than what we're seeing the real-time blended rental rates come in at that are closer to 1%. So a lot of overstated numbers in here. So if you exclude energy, inflation is actually fairly well behaved. We also saw the final look of Q1 GDP come out today. That rose from previous second look of 1.6% all the way up to 2.1%. Stronger than what the market was expecting at 1.6%. But the gains in GDP did not come from consumers, but instead from fewer imports. So it's not as strong of a report as what it seems like on paper, just because of the imports. Consumer spending, on the other hand, was much less than previously thought. Government spending and investment from AI data center buildouts accounted for most of this rise in GDP. So if you cut out federal government spending, AI buildout, the GDP is fairly weak right now. Durable goods orders also came out, showed that in total, the headline durable goods orders for May fell 4.5%. But a lot of that was due to aircraft spending. When we strip out aircraft spending and more volatile things within the core durable goods, we saw a rise of 1.6% net. That's stronger than the market had anticipated of 0.6%. So core durable goods was a very healthy number. The other factor we got was initial jobless claims. Those fell 12,000 to 215,000. And continuing claims did rise slightly to 21,000 to 1.82 million. It's actually still a very, very solid number, very healthy number within the continuing claims. And has been both initial and continuing claims have been fairly steady. With this PCE reading and the CPI and PPI last week, I think we're past the big numbers that we're going to get inflation because oil has now just about reached pre-war numbers. So when we get June numbers next month in July and August's that were and August numbers from July, I think we're going to be fairly well centered on inflation, which should continue to help mortgage rates. We have definitely gotten better the last 2 days. We're staying on top of things. In fact, we just got a borrower clear to close on a purchase, 11 total days from purchase agreement to appraisal, title work, and conditions. That included 2 weekends. We are rocking over here. We are efficient and staying on top of things for our customers. Give us a call, 616 293 2189, the Market Update Desk, your original singular market news source for West Michigan. And again, happy heavenly 14th birthday to Senior Analyst Mr. Gibson. Take care, everybody.